hegemony has been shattered. You're seeing this everywhere. Brazil buying corn or selling corn and soybeans to China for yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. What is gold again? Oh yeah, it's the only other tier one reserve asset. Who's been buying it all? Oh yeah, it's the central banks. You're seeing Russia and India and Saudi Arabia and China all trade in local currencies. You're seeing things like barter, where China is awarded a huge contract to modernize Iran's biggest airport, paid for it with oil in barter. All of these things used to settle in US dollars. They're now settling in other currencies.
In today's episode, Andy Schectman delves into the seismic shifts shaking the foundations of the global financial landscape. A central theme of his discussion is the challenge to the petrodollar system, long regarded as the bedrock of the dollar's dominance. Schectman points out that countries such as Brazil and China are increasingly choosing to trade in local currencies, thereby bypassing the traditional reliance on the dollar. Notably, these currencies are readily convertible into gold, signaling a strategic move towards diversification and autonomy in global trade. Moreover, Schectman sheds light on the concerted efforts of the BRICS countries, Brazil, Russia, India, China, and South Africa, to forge a new financial paradigm. At the heart of this initiative lies the development of a common currency backed by gold. This ambitious undertaking aims not only to challenge the dollar's hegemony, but also to fundamentally reshape the dynamics of global commodity pricing. By anchoring their currency with gold, the BRICS nations seek to instill stability and credibility in their financial systems while reducing their reliance on the dollar-centric status quo. As the petrodollar system faces increasing scrutiny and the BRICS alliance charts a course towards financial sovereignty, investors and policymakers alike are compelled to reevaluate their strategies. Now, we'll show you clips of the latest interview, but first make sure to hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
It's positive real return if you believe the CP lie. I mean, really, you should, the Bureau of Labor Statistics, we should take the L out of it. It should be the BS, because we know that the CPI omits many of the things that are actually inflating. But if we take it for what it's worth, a strong dollar and a positive real return would be kryptonite to gold, yet we find it continuing to move forward. And in terms of, is this the end of the dollar's supremacy? I would argue, like I said, its hegemony is gone, because, I guess we have to make a definition. What makes the dollar the world reserve currency? Now, it used to be backed by gold after World War II, but as we all remember our history lesson, all the gold was getting bled out of the treasury when de Gaulle from France called our bluff and said, look, there's more dollars being created than there are gold bars backing it. So he sent warships over to New York Harbor filled with dollars and said, please give us the gold. And we did. And that's when Nixon closed the gold window. But it was 3 years later in 73, well, 2.5 years later in 73, when we dispatched Henry Kissinger to Saudi Arabia to strike a deal with the Saudis. And he did. And the deal was, we'll protect you, and no one will ever mess with you again. We'll provide munitions and training and support. Before that, you and OPEC, by extension, will value oil in dollars. It has been the petrodollar, we will call Bretton Woods 2, loosely, where it was our protection of the Saudi kingdom, and by extension, OPEC, that has given us the synthetic demand, the hegemony, the supremacy. And when you weaponize the dollar, and when you realize the lead economic advisor to the United States government, a man named Jared Bernstein, his entire thesis is to lose the reserve status. He's written reports on it called Dethrone King Dollar. He's been interviewed in the Washington Post when Trump slapped tariffs on China. Great, he says, we'll lose the reserve status, maybe. His whole thesis is that it's a privilege we can no longer afford. So, could it be that they actually have thought this through, in the respect that the first thing they did, in essence, after stopping the Keystone Pipeline, was to sign an executive order to go green? So could it be that they're actually thinking to themselves, hey, Let's go green and then weaponize the dollar, and we'll see how well that goes. My point to you is that the rest of the world, at least the Southern Hemisphere, is looking at this country as hypocritical. And they're looking at this country as one that is moving away from the petrodollar. And indeed, we have been seeing, for the last year plus, all of these countries in the BRICS who, a lot of people were bummed that they didn't come out with a common settlement currency in August. I'm not, and they may not do it in October. They probably will, but maybe not. But it was Sergei Glaziev who has told us for 3 years that there will be a common settlement currency that will be a basket of commodities and will be a basket of currencies. Now, I want to talk to you about that in a little bit, but suffice it to say, what they've been doing instead before they've issued it, because last year they said, hey, you guys, listen, go back to the drawing board, come and present your findings in Russia in October. And in the meantime, let's all trade in local currencies. Hegemony has been shattered. You're seeing this everywhere. Brazil buying corn or selling corn and soybeans to China for yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. What is gold again? Oh, yeah, it's the only other tier one reserve asset. Who's been buying it all? Oh, yeah, it's the central banks. You're seeing Russia and India and Saudi Arabia and China all trade in local currencies. You're seeing things like barter, where China is awarded a huge contract to modernize Iran's biggest airport, paid for it with oil in barter. All of these things used to settle in US dollars. They're now settling in other currencies.
In today's market recap, silver price retreats from $26.80 amid uncertainty in the non-farm payrolls. Silver price drops from $26.80 as U.S. dollar bond yields rebound due to the U.S. employment data. The U.S. employment data will influence speculation for Fed rate cuts in June. The Fed is still confident of rate cuts this year, despite progress in disinflation has stalled. Silver price falls back sharply to $26.20 while attempting to recapture the crucial resistance of $27. The white metal faces pressure as the U.S. dollar and bond yields attempt to recover amid uncertainty ahead of the United States non-farm payrolls and the ISM Services PMI data for April. Investors will keenly focus on the U.S. average hourly earnings data. The annual average hourly earnings are expected to have grown at a slower pace of 4.0% from 4.1% in March, with steady 0.3% growth on a month-on-month basis. The U.S. dollar index rebounds to 105.75, and 10-year U.S. Treasury yields edge up to 4.61. The U.S. dollar and bond yields tumbled on Wednesday after less hawkish interest rate guidance from the Federal Reserve than feared. The Fed remains optimistic over eventual rate cuts this year, despite risk of a slowdown in the disinflation process. Now, we'll show you the best clips of the latest interview, but first, subscribe and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
Currencies. Now, that chips away at the hegemony, at the supremacy, and the settlement value of the dollar. But what about the reserve status, right? So instead, part of the petrodollar deal was after you make these transactions, you take any excess and you funnel it into U.S. treasuries. But what have we been told about all the central banks? Like China, who's down to just over 750 billion. They were at 3 trillion in treasuries not too long ago. Japan, Saudi Arabia, Russia, they're all selling or have sold their treasuries, and they are buying gold instead of treasuries, which has outperformed the bond market, has outperformed the S&P 500, has no counterparty risk, cannot be sanctioned, and I think is being remonetized across the globe. The world understands what gold truly is, an asset free from counterparty liability. So yes, I do believe that the supremacy is on the way out. It is not something that will happen immediately until it does. That's why I'm a fan of the phrase logarithmic decay. Little by little by little by little by little by little, then bang all at once. Now, we're not at the bang yet. But if anyone knows that it's happening little by little by little, it's you, because I watch your stuff and you talk about all of the de-dollarization and all of the relationships that are being made and the payments that are being made outside the dollar and the accumulation of commodities and all of these things that used to benefit the dollar are now actually hurting it as they are settling in other forms. So yes, it is happening little by little, and that all at once will catch almost everyone by surprise, because most people look at the little by little, and if they are even remotely aware, they blow it off because it takes too long and it's not instant gratification, but they will be blown away by how fast it happens when it's like that. And the announcement by OPEC would be, listen, you guys, all of our OPEC brothers and sisters are on the Belt Road, every one of them. Most of us have already applied to the BRICS. You got Iran and Russia, part of the BRICS, the OPEC plus, you got Saudi Arabia, United Arab Emirates, on and on and on. And we've also, most of us have joined the Shanghai Cooperation Organization, the largest regional financial and military organization on the planet. So we put us all together, we're about 85% of human population. We're not going green. And maybe that's why the Crown Prince of Saudi Arabia recently said China was our most important trading partner this year and for the next 50. Those words were chosen specifically. It was 50 years ago we signed the Petro deal. So thanks for the memories, you guys. Now that we have our ducks in a row, including 3 of the 4 largest nuclear arsenals on the planet, the majority of human population, a large swath of the shipping lanes, the majority of oil and gas production, the majority of the rare earth commodities, the majority of the precious metals, and heck, we even make more grain or produce more grain than the West does. Thanks for the memories. We've decided to no longer take US dollars for oil. And that's the bang moment when every country on the planet dumps those dollars. Now, we're not there yet because it doesn't serve them any good to cut off their nose to spite your face. But look at the trajectory of bond sales moving down and gold sales moving up. And this, to me, is the beginning of the end. The question is, how far down the road is the end? And I'm not sure, but everything tells me we are on that road with very little opportunity to get off. I think we've already crossed the Rubicon. Western friendly entity. It was actually put together at Bretton Woods right after World War II. About 150 countries that are kind of Western aligned. And they came out with a report. I was asked this question kind of off the cuff by Michelle McCory last year. And I said to her, well, maybe if they beat them to the punch. And what I mean by that was the IMF came out with a report, and the report was titled, Gold as an International Reserve Currency, a barbarous relic, no more, ? Now you have Kristalina Georgieva, the head of the IMF, who recently said any central bank digital currency that is not pegged to something would be just fiat. And what would be really the only thing that would make sense to peg it to? I know the only other tier 1 reserve asset that has no counterparty risk, like gold. So is there a way for them to gain legitimacy and to gain trust again? I think it starts with being transparent. And this is what Bretton Woods 3 is. According to Zoltan Pozsar, it's an era that will be described by transparency, a la blockchain, and commodities. Not opaque debt instruments by a broken, insolvent government who goes around the world imposing sanctions when the world thinks that they're hypocritical. Let me just give you one example of that. I talk about it a lot. You may have heard it, but look, 20 years ago, we invaded Iraq under the guise of weapons of mass destruction. Sorry, didn't find them, but here we are. 20 years later, we're still there. We're sanctioning 14 of their banks for having the audacity to trade with Iranian banks because they wanted to buy liquid natural gas instead of fry to death in the summer. So we sanction them. We control the oil revenue and all their natural resource revenue. They made $90 billion in oil revenue in 23. And at the end of the year said, hey, can we please have $1 billion? And they said, we said, not a good time right now. So what did they do? Well, they have officially applied to BRICS. They are in the process of kicking all Western coalition forces out of the country. They got rid of all dollars in the country, no green bills in any banks in the country. And if you own a business in Iraq and you trade in dollars, you will go to prison and you'll lose your business. Doesn't sound like they're very appreciative of what we've done for them. And I say that tongue in cheek. The world views us as being hypocritical. So I think when you talk about the hypocrisy and the fact that we are creating $1 trillion in debt every 100 days, roughly, $100,000 a second, it's not a good recipe.
What do you think of Schectman's take? Will BRICS master plan pan out, or will the dollar resurge from its ashes? Post in the comment section down below your honest opinion. Share this video with a gold bug and watch this video right here because you'll love it. I see you on the other side.